LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys.
All right, so we're talking Nike ahead of earnings. This has been a real stinker for investors over the last couple of years. Doesn't seem like they're getting anything right. The new CEO's trying to do a turnaround plan. But Megan, when I look at this company and I just look around, like maybe people walking down the street, I don't see as much Nike stuff. I see a lot of their competitors' stuff on people. Maybe that's just a Chicago thing, but are they getting their lunch eaten by these competitors at this point, or is it just, a Nike problem?
I don't think that you are an edge case there in what you're observing. I think that a lot of people are observing this large brand decline for Nike. It seems like Nike kind of lost its soul a bit, and, it lost its running edge that it once had. It lost its premium status. It lost its exclusivity and just its coolness as a brand. And, I'll say anecdotally here in the LikeFolio office, we have a ton of interns in for the summer, and I've never seen a Nike swoosh on their feet, but I've seen lots of On Clouds. I've seen some New Balance. I've seen some Hoka. And so I think that that's just the story at large right now, and really over the last year, is when we look at forward-looking web visits, when we look at what consumers like and what they're excited to purchase and brands that they're looking toward, it's not necessarily Nike. It's increasingly less Nike and more the On Cloud, more the Hoka or the Deckers brands, as I mentioned, even New Balance. And you can see this on this chart. And so, every quarter we look, because if you were to look at this on a pie chart, Nike is still the largest player here. So let's be clear, they have the largest piece of the pie, but that piece is shrinking as these other players that are a bit more premium, a bit more high end, and just a bit more trendy are taking little bits of their market share. And we keep waiting for Nike, that negative 30% year over year that you see, to start to slow, to start to temper. But I think every time we've been on the show the last couple of quarters, this has been the rate of decline. So far for us, at least from a consumer perspective, we haven't seen that bleeding stop yet. Now, we know that the bar is very low. The stock is down significantly, I think down about 18% year to date. So that's something to consider. But at least from us on the consumer side, we just aren't seeing a sign of a turnaround take hold yet. We aren't seeing signs that Nike is that brand for consumers or winning over some of those consumers that it might have lost.
And the 3-year chart looks worse. And you mentioned the two key names. It's On Holdings and it's Hoka, right? Those two brands really seem to be doing damage. Why? Well, Nike's, remember, started out as a running shoe, right? Then it got into basketball. I mean, it seems like the decisions they're making on some of their people wearing their shoes are just bad decisions. These other companies, yeah, they're smaller than Nike, but Nike's cash pile that allows them to do R&D, and spend money, well, they need to start doing the D and developing real shoes and get back in this game, because right now they're just lost. I mean, the chart gives you the only positive about this is what you just mentioned, Megan, which is the bar is so low. They expect nothing out of this, and this new CEO is making an attempt, so they need to break out with some new news, some new story, something to get some people excited, Megan, because right now it's just not happening.
Yeah, we're looking for that consumer enthusiasm. We're looking for that shift in sentiment, because for us, that's the best long-term indicator. And we just haven't seen that yet. And it's because of exactly the things that you mentioned. It's a lack of innovation. It's a lack of newness. And, when you go out and you're looking around, you can spot an On Cloud or a Hoka shoe immediately. They have such a unique design. It's very different than what consumers are used to, and it's very fresh. And the athletes that are wearing those shoes are the breakout stars. They're the cool athletes that the youth want to emulate. And it seems like Nike has kind of lost its way with that. Nike is still leaning on Jordans, which, while Michael Jordan was an extraordinary athlete, it's been a couple of years. I'm not sure that a lot of kids today, would have quite the love for him that they did maybe a couple of decades ago. And so I think that this is one where they definitely need to win back those performance athletes, the runners that used to turn to Nike are now looking elsewhere. And so I think that there's a performance gap there. And then there's also just a lack of newness and coolness that, as you mentioned, I think development could help. But I will say, I believe the new CEO, while new, is not necessarily new to Nike. I think he was with Nike for a long time and has since returned. And I believe he was part of the Just Do It campaign. So if he can kind of reignite some of this passion that consumers once had for this brand, especially among women and especially among runners, I think that Nike can certainly win back some of this market share. But for now, for us, whenever we look at this, we feel like this earnings play, it's almost like trying to catch a falling knife. So for us, even though the bar is so low, we just don't have the consumer data that backs up a bet to the upside quite yet.
Yeah, and Megan, missteps. I think last quarter everybody was expecting this big turnaround story from Elliott Hill, the new CEO. He's been with them for 30 years. You mentioned he's been on some other promotions, but he's trying to innovate this company. But it's like moving a ship in a canal. It's gonna take longer. Maybe the investors have patience for. But when you look at the brand recognition that they have, they're top 10 every year globally in brand awareness. Is that where that holds the key, where an investor could come in here and say, hey, you know what, I'll give this a shot and I'll be in it for 5 or 10 years and I'm not going to worry about it right now because it's at such low prices, I'm comfortable with it?
Yeah, absolutely. I think from a long-term perspective, that's a bet that you could take, especially in levels that we're trading at now. And this is one, like I mentioned, this is still the biggest player in the market. I think that Nike still commands about 26% of the athletic market share. So this is still a major company that is obviously resonating with a lot of consumers. It's just lost that tremendous growth that it had, especially leading up to and during the pandemic, whenever everything shifted online and it kind of leaned in almost too hard to the DTC strategy, alienated some retail partners. It's starting to gain those back. So I think that a turnaround is certainly possible. And with a brand like Nike, I mean, it's a great name to bet on long term. It's just our data, at least for this earnings event, we are sidelined because we just don't have the consumer sentiment or the consumer demand levels to back up a bet to the upside.
Yeah, bar's low on this one. But and tell your buddies over there at LikeFolio, the Swan Brothers, that Michael Jordan is the best basketball player of all time and maybe the best athlete of all time. So let them know that. Appreciate it, Megan. Have a great day.
Hey.
All right, that's Megan Brantley, VP of Research at LikeFolio. Kevin, you heard her. I mean,